Video, you learn when to enter long the stock market and when to stop out of the stock market, stop your loss. So for those of you that don't know, this is a 30-minute trading strategy for the stock market, SPX, SPY. You use a 50 SMA, a 30-minute time frame, and you do not use pre-market or after-hours trading in your charts. You turn that off. So however you do that on your platform, do that. Get the 50 SMA, turn to a 30-minute time frame. When the price of the stock market, as shown here in this picture, is above the 50 SMA, you enter long, which also means you enter long as close as you can possibly get to the price of that 50 SMA as the price is getting above it. That's your lowest risk, best possible profit potential entry. So you enter long as close as you can to that 50 SMA. You take profit at whatever point you want. In this example, I show that the price of the market from the entry long, which is price over 50 SMA, which is where the market starts to go bullish, which is where algorithms start to buy equities long, the market goes up $76 a share on the SPX, or 1.22%. If you use a 3 times leverage ETF, you're going to make about 3 to 4% if you call it that whole move. Your stop out is when the price goes below the 50 SMA. The reason that's your stop out is because you're not sure if when the market breaks that 50 SMA, if the market's then going to go into a good bearish sell signal move. So continue on. The market doesn't last below the 50 SMA long. The sell signal does not last very long. So what do? When the market goes back over the 50 SMA, you enter long. You enter long as close as you can possibly get to that 50 SMA. It gives you the lowest risk and the best possible profit potential. You take profit anywhere on the move up. As you can see, I mapped off that move. From entry long to tippy top of that move was 103 points on the SPX. Your stop out is where? Your stop out is below the 50 SMA because you don't know if it's going to go into a good sell move or if it's just going to be neutral. All right. I will continue to make these videos going on. But again, that's the gist of it. You're long above the 50 SMA and you're neutral, bearish, or stop out when the price goes below. If we fast forward a little bit, look at what happens here. You can see there's a big knee-jerk reaction down. And then shortly after, you can see we break down the 50 SMA and you go into a big sell move. So again, remember, you enter long the market as close as you possibly can to that 50 SMA and your stop out's below. So take this little mini example, or I'll make another video because we're running out of time.